If you like the following content, please leave a tip at buymeacoffee.com/Whitley.
Welcome to Technology Investment Investigations, the channel where we dive deep into the world of tech investments. Today we've got a hot topic on our hands, ARM Holdings PLC. We're going to perform a SWOT analysis to determine if there's any value investing in this company, so grab your notepads and let's get started. ARM Holdings PLC is headquartered in the beautiful city of Cambridge. It's a global technology company renowned for its semiconductor and software design. Interestingly, ARM's history is intricately tied to Apple and the evolution of what's known as the RISC-based computer. RISC stands for Reduced Instruction Set Computer and refers to a chip's architecture designed for simplicity and efficiency. Originally, ARM was an acronym for Acorn RISC Machine, because its very first product was a reduced instruction set computer chip for Acorn's Archimedes computers. But when ARM was incorporated in 1990, it changed the acronym to Advanced RISC Machines to focus on a broader market beyond Acorn computers. Apple's early involvement and support were pivotal in shaping ARM's trajectory. Their partnership set the foundation for ARM's journey, marked by strategic acquisitions and divestments. So if we have a very quick look at the financials of this company, we can see that very little of it is negative. It's quite a well-off company, but something so established you expect this. Its share price across 52 weeks is relatively stable given the market for tech companies at the moment, but it's quite expensive if you're just coming in as an amateur investor. It has a very large market cap, has very good revenue, and its assets are quite significant, all up in the billions. This isn't a company that you expect any kind of volatility to come from. The stability is what allows people to invest in it, knowing that they're going to get a reasonable return purely from inflation of whatever local currency they have. But it's also that lack of volatility is what put off a lot of amateur investors who rely on the big swings of the market in order to generate any kind of profit. You won't get that with this company. It's very, very stable financially. So let's try and discover why that is. What kind of market does ARM fit into? Well, it's the world of semiconductor design and licensing. They provide the architecture and the intellectual property for CPUs and GPUs used in nearly all smartphones, tablets, and Internet of Design devices. For those not familiar with the Internet of Design services, this encompasses a wide range of applications and platforms that connect devices and enables them to share data and operate seamlessly. ARM doesn't sell chips, it develops the chip architecture and the intellectual property that it licenses to clients to produce the chips. On top of licensing fees, the companies get a small royalty, a percentage of the value of the chips shipped. Consider it to be like the writer writing the script for a film. This is on average 1.7% of average of whatever that chip is sold for. So if a £1,000 or $1,000 smartphone has a $200 ARM content, the firm will get roughly £3.40 or $3.40 I should say. On top of the volume growth, we believe ARM has a potential to steadily increase its royalty rates as it introduces new features that improve chip performance. We model a blended 2.5% royalty for 2030 going onwards, compared with the 1.7% that it's having it today. This is the tech that enables the brains of your gadgets to run longer on a single charge, and it's in very high demand in an age of portable, energy-efficient devices. ARM's technology is a pivotal part of the entire industry, propelling it forward to great investments. So that's the background of the company. Now let's do an analysis. We dive into the SWOT analysis, starting with the strengths. ARM's architecture is incredibly widespread, with a massive ecosystem of partners and licenses. Their long-standing relationship with customers, including a recent deal extension beyond 2040 with Apple, have created a solid, and I mean a solid foundation for innovation. Apple, one of ARM's cornerstone investors and partners, is a testament to the strength of this collaboration. They've also acquired companies like Micrologic Solutions, Allen Software, Infinite Designs, and Euro MIPS to enhance their software and design capabilities. Their strength lies in this expansive network. And of course, there are weaknesses to consider. A wide moat is underpinned by the firm's switching costs and intangible assets. Once a company develops a chip in a certain architecture, it implicitly accepts that further versions of the chip will be done in the same architecture. Even large companies like Apple can take years and millions of dollars to switch architectures, as happened with the Mac laptop CPU switching from Intel to ARM-based chips. These switches can be a double-edged sword, as they can also slow down the adoption of new technology and deter potential clients from investing in ARM-based solutions. So from a market opportunity point of view, ARM is poised to benefit from the growth of the Internet of Things, edge computing and the shift to 5G. The Internet of Things services encompasses a wide range of applications and platforms that connect devices and enables them to share data and operate seamlessly. Edge computing, on the other hand, involves processing data close to where it's generated. This reduces latency and improves performance. These trends will increase demand for the technology, especially in the context of the Internet of Things and edge computing. The rollout of the 5G networks, which offers faster and more reliable connections, also enhances the need for efficient chip architecture. The Internet of Things and 5G are catalysts for ARM's growth. Plus, the expansion of artificial intelligence and machine learning and the need for energy efficient designs are well suited to power the next wave of technological innovation. Their acquisitions like Apical and the leading software further solidify their presence in these emerging markets. Their potential to increase royalty rates as they introduce new features is another exciting opportunity. And finally, we've got to get to the threats. As mentioned earlier, competition is fierce, with players like RISC-V gaining momentum. RISC-V represents a shift towards open source, customizable RISC architecture, and several tech giants including Google, Nvidia and Western Digital have started to develop RISC-V chips in recent years. This poses a notable threat to ARM. Also, the usual regulatory scrutiny and potential trade issues could affect ARM's global reach. ARM architecture that many of its customers are also major supporters of the RISC-V architecture and related technology. ARM has known to be warned that they may choose to utilize this free open source architecture instead of its own products. So, in conclusion, ARM Holdings PLC is a powerhouse in the semiconductor world with a very strong legacy and a promising future. However, the company faces challenges in competitive landscape amid concerns over its ownership. Should you invest? That's a big question. That depends on your risk tolerance and your belief in the ability to stay ahead in the tech race. Also, as I've always had with all tech companies, and as you've been watching this channel, the lack of dividends really does gripe on me. I think all firms that trade shares should give some of their profits back to the customers, or back to their shareholders, I should say. You get limited shares with most companies, but I think a company like this should be willing to give up some of its dividends just because we're investing in it. And I think as a small trader, small investor, those dividends mount up and they do help a lot. But from your point of view, let's keep a close eye on the strategic moves of the industry dynamics, as the history shows they're no strangers to change. I do believe that ARM will be around for a very long time, unless of course a big conglomerate comes along and buys it up completely and takes over and moves off to something else. Okay, so that's a wrap for our SWOT analysis on ARM's PLC. We hope this information helps your investment decisions, but remember, investing involves risks. So do your due diligence. Don't just rely on the information that I've given you today. Go out there, do the maths, do the financials for yourself, and work out whether it's worth investing in whatever time span you choose to invest in. So thanks for tuning in, as always, and happy investing.
Thank you for watching. Please like, subscribe and hit the notification bell. If you enjoyed my content, please support this channel by visiting buymeacoffee.com/Whitley or scan the QR code to leave a tip.